Hi, my name's Marc Chapman, manager of the HI Principia Fund. During the month of November, the fund declined slightly over that period, and that was essentially driven by the trends which started in late September. The trend towards deleveraging of portfolios meant that small mid-cap stocks around the whole European universe underperformed in general the large cap sectors. Second, growth type equities, also of a smaller size, underperformed even more as the market derated these names because of concerns about the future path of interest rates. So over the time period of the last month, the fund had a slight decline. And in particular, some of our growth orientated names had a sharp derating of that time period. One example would be Soitec in France, which I've discussed before. The company is a technology business which has a specific process called FD-SOI, which is basically going to transform the growth prospects of lots of its end markets. We think organic growth will be more than 30% for the midterm, and there will be operating leverage, which will lead to a dynamic path of earnings. Long-term stock is very attractive. In the short term, it's derated because of these growth concerns. Following the issues in the market, we deleveraged the portfolio and reduced the gross exposure. However, in the past few weeks, valuation levels have reached attractive levels in lots of areas of the market. And this has meant that we've been able to find opportunities again in good quality equities, which previously have been too expensive, but following the recent derating are now attractive given their earnings profile. So two examples I would give. One is SimCorp, which is a Danish software company who provides leading edge technology for asset managers to save costs in IT. The company's grown out of Europe into the US and finally into Asia, and they have a large pipeline of interest in new customers, which will fuel organic growth into the midterm. The stock was on a very high rating, but following the retreat of growth type equities, it's now on 25 times 2019 earnings, offering double-digit earnings growth. So we think that's attractive. Another one would be Fresenius Medical Care, a leader in dialysis care across the world. The company had a profit warning 6 weeks ago, and this caused a large derating. Most of the issues that led to the warning, we think, are one-off in nature. And in fact, dialysis and their position within that marketplace will continue to strengthen. And so their organic growth will return at least to its previous level. And that will drive a good improvement in return on capital. And the stock now is attractive on 15 or 16 times forward earnings for a very good earnings profile. At the moment, the risk return is skewed to the upside. On the long book, we think it's more than 50% upside over 2 years. And at the moment, it's a good environment, again, for bottom-up stock picking. Thank you very much.